Hello and welcome back to the Geordie Pig Investor channel. Today I'm going to be going through my Trading 212 portfolio and reviewing end of Q1 update, revealing my £12,000 plus now dividend investment portfolio. So yeah, it's been really successful 3 months. We're going to dive into how the first quarter has been for myself, have a look at all my stocks and see how they're all getting on. So if we have a little look on this graph here that Trading 212 has set out for us, which is quite nice. Something to consider with these, the only annoying thing about this is that it doesn't actually include your dividends received in returns. So any dividend payments you were to receive, so say I earned just over £25 in March in dividends, that won't be included in my return. So this is just simply returns that I have received on my investments themselves, okay, not including the dividends. So if we were to include the dividends as well, obviously my returns would be even higher than what it's showing on screen right now. But if we have a little look, 3 months ago on the 1st of January, my portfolio was worth just under £6,700. I had a return of £291, which was just over 4.5%, and I'd actually invested myself £6,400. So every single week I was consistently putting my investments in, and you can see it creeping up and up and up. And as you'd expect, you can see, there's little dips in the returns, down to 4.4, back up to 5.5, back down. But it has gradually grown over time, especially this last month. It's really pushed on. And if we go all the way up to now on the 1st of April, we can see that I have now returned over 7.5% and I have invested £11,500. So since then, I've actually invested over £5,000, which I'm really happy with. And yeah, I don't think I'll be able to continue at this sort of rate over the coming months, but I had the money available and, I like to pay myself first. So the first thing I do when my monthly paycheck comes in is I try and put as much as I can into my investments. Obviously, after paying out for my mortgage and necessary bills, this is my next first protocol before trying to buy, any luxuries in life. I'm sort of really trying to push my investment portfolio, as you can see. So my actual overall returns is just shy of £870 right now. And the portfolio value is now up at £12,397. So like I say, really happy with this. I feel I've had a really successful first quarter of the year. I'm not expecting this to continue over the next quarter. It would be great if it does, and it would be great if I can continue to keep picking my stocks out at good prices and then seeing those stocks grow. But like I say, I'm a dividend investor, so for me, I'm more bothered about getting long-term, good quality growth dividend stocks that I know over the long term are going to grow those dividends and also gain capital over the long term, which isn't, a 3-month period is not a good test of that. We're looking at long term, 10 plus years. So bear that in mind as well. But like I say, it's always nice for it to be in the green. And let's now look through the holdings. So if I go into my investments on here and I scroll down, we will just go through all of my holdings. So I've only got, I think, 34 holdings now in the portfolio. I'm trying to trim them down as much as I can. I've currently got 3 ETFs included in there. And then I've got 31 individual stocks, which are split between 2 separate pies, one being my US dividend growth stock pie, and my other one being my UK focused dividend growth stock pie. So I'm happy to have that split. Reason being, I believe the US is usually going to be slightly better in performance long term, but we have to pay a 15% withholding tax on any dividends paid from US stocks, even in an ISA. So because of that, I like to have UK investments as there is zero holding tax and we get straight profit from the UK investments. So it's kind of why I feel it's good to have that balance, and I personally prefer to have both included in my dividend portfolio. My first stock is Altria. This position been down for quite a long time. I'm not actually looking to add any more to this position at all. I'm quite happy just to leave this as it is, and it's actually up now, which is great, 4.5%, because it was down for a good little while, but it has recovered. I'm potentially sell out of this position in the next sort of year or two, but I'm happy just to leave it at that for now. Reason being, I've got British American Tobacco, which is very, very similar stock, and it's the British equivalent pretty much of Altria Group. I don't want to be overly weighted in the tobacco sector, as I feel it is a sector that, yes, it's good with having maybe the odd stock in there, but if I have too much of my portfolio in that sector, I feel that you're running a risk of potentially losing out on some future gains. And I believe with Altria Group, it's not going to be a great long-term growth stock. It's going to be more of a dividend payer for the time being, which I'm not too bothered about anymore. I am definitely more looking towards the long-term growth stocks. My second position is Apple. As you can see, I've got 1.76 shares, and it is one of my very few red positions. It is down 5.5%, and I have £240 worth. I believe Apple is at quite a nice price right now. I like around about the 170 to start buying in again. So if it was to dip a little bit lower and get towards 165, 170, I would potentially look to add to this position even further, because it's such a quality stock long term. They've got quite a slow growing dividend, but I believe, it's still the future. And I think them scrapping the electric car was a very good thing, and just focusing on what they're good at is going to work better for the long term anyways. My next stock is AstraZeneca, which I'm up just shy of 7%. So I've had some really nice returns in there. And I just received my first dividend payment from them last month, which was a nice £6 dividend. I then have BAE Systems, which is up a huge 27%, which is 12.3 shares worth. And yeah, really happy with that position. A little bit high price right now, so I'm not really looking to add too much to it. But you can see over the last 3 months, I've pretty much made that full amount of those gains. But yeah, nice position that I've got in there. My next stock is a British American Tobacco, which is just slightly in the green. And I'm happy with this stock. Like I say, I'd kind of want to just only be putting money into here rather than putting in Altria as well. They've got such a good yield, just shy of 10%. And I still believe they've got really, really strong financials. I've actually done a video on British American Tobacco, breaking the whole stock down and doing a stock analysis. So if you want to check that out, please do. I do believe long term, it still has really strong fundamentals and will progress. My next stock is my second red stock in the portfolio, and that is Burberry, which is a stock that I am happy to continue holding and also add a little bit into the position. Over the last 3 months, it's had an awful performance. I only started adding this position in about 6 weeks ago, and even since then, you can see I'm down 5%, but it's been down 14% in the last 3 months. It is a really high quality fashion brand, another stock that I'm happy to continue adding into. My next stock is Caterpillar, which is one of my best performers, up over 42%, and over the last 3 months it has also had really nice returns. I then have Chevron, which is up 7%, and I've made £12 on the position. Again, over the last 3 months it has been up nearly enough all of that 7%. I was adding in quite a lot towards the back end of last year as my position was in the red, and I did feel it's got, again, really good strong fundamentals, and I believe that it was going to slowly increase back up in price, and that has been the case. So that was nice to get in at the right time and see those nice returns from it. My next stock is Cranswick, and again, I wasn't able to get too much of a position in here before the price started spiking up, so I only have around about £69 worth of this stock. I would like to have a little bit of a bigger position in here, but I just believe the price is a little bit high right now, so I'm not really too interested in buying in, and it has had a good last 3 months. We're then coming on to one of my biggest positions in the entire portfolio, and this is due to me doing a weekly dollar cost average into Diageo as a challenge. So every single week I'm buying 1 share of Diageo. It's a good dividend payer, reliable, pay dividend for a long, long time, and I'm very happy to continue adding to this position every single week. I've then got Greencoat UK Wind, which is a solar powered company, and I have 183 shares, which are just slightly in the green. We've then got GSK, which is again up a nice 4%, and that has had massive gains over the last 3 months. I only added into this position about 6 weeks ago as well. It was the same time I bought in at Burberry, so this one's obviously performed a lot better than Burberry has, but like I say, I do believe that Burberry is going to recover. We've then got Haleon, which I've been buying into for a little while now, and it's been very, very up and down with this position because long term it is going to be a really good dividend growth stock. We've then got my first ETF, which is Invesco EQQ Nasdaq 100, which has performed fantastic since buying in, and I dollar cost average into this every single week. It is up over 11%, and like I say, I like to have my 3 staple ETFs to dollar cost average into because they are the main core of my portfolio. I then have Legal & General, which has been performing really well recently, and I haven't been able to add to this position for quite a while because of the fact that it is up so much. But I'm not complaining. It's a really good dividend payer, high dividend payer, and I'm looking forward to receiving my first dividend next month from them. We then have MasterCard, which again is one that I bought into quite recently. Just such strong fundamentals and long term. I can only see this going up and up and up, similar to Visa, which I also have in my portfolio. So I decided to buy into this stock, and I'm trying to add a little bit every single week, and it's already returned a nice little 3%. We've then got Microsoft, which is up nearly 20%. Again, I haven't got such a big position because it just seems to be going up and up and up. If it gets back down towards the $400 mark, that's where I would be happy to rebuy back in. We've got National Grid, which is up over 5%, and I have quite a nice position in there. Then we have Realty Income, which is up just shy of 4%, and I know a lot of people are down on their Realty Income positions, so for mine to be in the green, I'm really happy to see this. And it pays a monthly dividend, so that is always nice to get every month, and see that dividend actually increase every month as well is really, really motivating. We've then got Rio Tinto, which is just slightly in the green, another stock that I only just bought into, similar to when I bought in with Burberry. I bought into Rio Tinto as well, and yeah, it's very much flatlined over the last 6 weeks since I have had it. But in the last 3 months, it has performed really badly, down over 14%. The mining sector is very, very volatile, so you're going to have to expect big swings with it. So I do expect it to re-swing back up, hence why I'm going to really continue to buy into this position while it is still down at that sort of price. I then have Sage, which is a little bit of a smaller position, alongside Scottish Mortgage Investment Trust, which are both up 20 and 25% respectively. We then have Shell, which is up 4%. And then we have our final stock, which is in the red, and that is Starbucks. Slightly in the red, only down 1.4%. And again, I've just done a stock analysis video on Starbucks, going through the core fundamentals and my personal opinion on a good buy price for them. So if you want to check that out, I'd really appreciate it. I'll put the link in the description down below. Next up, we've got Slavana Platinum, which I bought into a couple of months ago. I bought one big lump sum, as I felt was at a good price, and has performed really well. It's up actually 8%. Reason being I bought into this one is because it has a massive yield of over 10%, if I show you here. And when I bought in, it was actually closer to about 12 to 13% for myself. So that's really good, and I'm looking forward to receiving my first dividend payment from them next month. I know that I have mainly dividend growth focused stocks, but I do have a couple, as you can see, that are higher yielding stocks, and it's quite nice to have them, especially when they're returning green as well. Why not have them in the portfolio? If they're performing well and they feel that they're at a good price, don't be afraid to buy into some high yield stocks as well. It's just about getting that balance and making sure that you stick to your core fundamentals. My next stock is Tesco's. It is valued at just under £200 in my portfolio, and it is up just shy of 8%. We then have Texas Instruments, which is up nearly 12% in the portfolio. Again, really good performer. We then have my best performer in the entire portfolio, which is up 51%. Such a small position because it's up so much, and I wasn't able to get much more in, which was a bit of a frustrating time, but at least I've made some sort of gains on it. We've got United Utilities, which is up 3.5%. We've got the FTSE All World, which is my second ETF, which is up over 8% in the last 3 months and up over 10% in my portfolio. So they've performed really, really well recently, my ETFs. As you can see, the S&P 500 one as well is up over 10% in the last 3 months and nearly 13% since I bought in. And then my final three stocks being Vici Properties, which I have a massive position in. It's actually my biggest position for a single stock. I have over £900 worth, and it is just slightly in the green now. Anything under sort of $29, I was just buying in every single week, as I feel that this is really underpriced for Vici. Pays a really nice dividend yield. I think it's around about 5.5%. Yep, 5.57%. And for myself, it's actually closer to 6% with the price I got in. So really happy with that position. And then we've got Vici and Waste Management, which are two really, really good long-term growth dividend stocks. Both performed really well for myself so far, being up 10 and 22%. So that's the full portfolio. If I run through it quickly again, you can see I only have 3 stocks out of 34 in the red, and they are very small in the red as well, so I'm really happy with this. I just feel like the portfolio has performed so well over the last 3 months, and I will continue to buy into my stocks, dollar cost average into my ETFs, and do what I'm doing right now. So I hope you've enjoyed the portfolio update video. If you've got any questions, let me know in the comment section down below. I really appreciate it if you'd like and subscribe to the channel. And this is the Geordie Pig Investor, over and out.